Welcome to G3 Investors, where we trade the market using our systematic approach to trading. Okay, well, we're going to take a look at week 12. The week ended March 26th, last full week in March. And right now we're looking at the S&P 500 index. This is a six-month chart. All of these will have the blue line as the 20-day or the 20-period moving average, and the red is the 50. You can see here, well, we had a pullback from February, and then the S&P went on and made new all-time highs, and then spent the last few days, especially this last week until Friday, pulling back, and it got right down here and tested, just barely touched the 50-day moving average, and then on Friday we took off. So I'm calling this the tale of two markets. So this is one market where it looks pretty good. I mean, it looks like we're recovering here. And so you got the SPY or the SPX, which is the S&P 500 index, and of course the Dow Jones will follow along with that. As a matter of fact, it's even done a little bit better. Its pullback wasn't quite as deep as the S&P 500. And then of course you've got the New York Stock Exchange, and it looks very similar. Well, so what's the other market? Well, the other market is the technology sector, or the Nasdaq Composite Index. Whoops. That's a much different look. So we've had a February pullback, and I would call this a correction because we lived under the 50-day moving average for quite some time, and then we just barely pulled up above it, and then we pulled right back down in. And of course our recovery on Thursday and Friday is not quite up to par with the rest of them. Now, interestingly enough, the Russell index, the Russell 2000, whoops, typed in the wrong number there, RUT. I'm not typing too well today, folks. Okay, looked like it, again, here's a slighter pullback and went on to make new all-time highs. And that's the other interesting thing. Of the five indexes that we follow, four of them have made new all-time highs in March. But the Russell really had a strong pullback, and based on this action here, I thought, it was going to correct and go into a correction, and it actually did for 2 days, if by my count. And then now here we are right back at the 50 days. So what's going to happen next week? I don't know, but what I do want to look at is the strength of the market. So I'm going to look at the positions that we've taken, because that's where the strength of the market is, and that's what we do when we trade. So we're looking at this market because 3 out of the 5 indexes are going up, so we probably have a rotation of some sort, going to more of the brick and mortar stocks, or the more conservative stocks, I don't know. But let's look at what we have positions in. Well, first of all, let's look at XLB, which is the ETF for the material sector. And we can see not only did this one pull back, see, it made a new all-time high, then it pulled back here, not quite to the 50-day, and then made a new all-time high on Friday. So obviously we got in that one, and that looks like it's gonna go much higher to me. Industrials, XLI, that's another one we got into. That one didn't make a new all-time high, but very close. Well, it made a new all-time high here, and then it pulled back. But again, that's a shallow pullback just to the 20-day. Nothing wrong with that. Housing or home builders, and that is a nice move there. And that was the previous all-time high, and this is what happened on Thursday and Friday. Big move there. And the transports, another strong sector. Again, that made an all-time high on Monday, and this old blue line, dotted line here, was the previous all-time high for this ETF. And then on Monday, that was the 22nd there, made a new all-time high, pulled back, and then boom, boom, another nice breakout. Very nice breakout there. Now we got a position in the SPY, which is the ETF that the Spider 500 S&P 500. So we got a position in that one. Another index we took a position in was the Mid Cap 400. Again, this one looked like it was going to go into correction, but popped right up above there, and it looks to me like it wants to go up there and reacquire this top. Now that's a double top right there until it breaks out above it, which is what it looks like, the probability that it's going to happen. XLF, the financial sector, is another position we took. A more shallow pullback, nice little pop up, and so we got a position in that. XLV, nice move there. Again, this one was really in quite a funk there, and looked really weak, and it just went sideways. I think I got in this one and then got stopped out on this move down here and turned right around and got back into it, because that was a huge move on Friday for the healthcare sector. Now, the interesting thing is biotechs, which is a subsector of that healthcare sector, is living below the 50-day, and looks like it's got a double bobbin formation here maybe. So maybe it'll get some movement. We do have the end of the quarter coming up next week. There's definitely going to be some additional volume as people buy in, and the window dressing that typically happens at a quarter end. Could be some volatility next week too. And our last position is SMH, which is not really a super strong one, but again, pulled back, went sideways, and then the semiconductors finally broke out here. Now, that's the only technology sector that's breaking out, because XLK, which is the technology, and the QQQ have not broken out, as you can see. All right. This is how we performed year to date through March 26th. We made 23%. Okay, our winning trade percentage is almost 67%, and for the month we're up 7.9. Now, our goal this year is to double this money, and if we were to do that, we should be at 25%. We've only got 3 days to make 2% and to be on our goal. So will we do that? Who knows? Nobody knows. But if you're interested in becoming, getting the trade setups that I see daily, and throughout the day I update, make comments, and show the trades that I'm making, just sign up or highlight that and put it in your browser. Okay, here's the 1 week heat map of the S&P 500, and you can see got a lot of green on the screen. So this is a pretty broad move, other than Tesla, Facebook, and Amazon. The big tech lambs aren't doing so well. I guess with the dollar strengthening and interest rates rising, the tech has been weak as a result of that. Now, that's it for this week. This is Greg Gallagher with G3 Investors saying good luck and good trading.